My name is Brian Wish. I'm an entrepreneur, CEO, and pathfinder. If I've learned anything in life, it's that self-discovery is a critical part of living intentionally, building meaningful relationships, and achieving the future we see for ourselves. In July of 2021, I sold all my possessions, headed west, and began a quest to live a fuller and more meaningful life. The experience helped me truly understand the power of a single moment. And through my conversations with leaders from all walks of life, I've seen how that one phone call, heartbreak, diagnosis, or lost job can transform the entire course of our lives. In this podcast, I sit down with entrepreneurs, influencers, and experts across industries to talk through the events that changed everything. Together, we'll relive the make-or-break decisions, hard conversations, periods of despair and hope, chance encounters, and everything that followed. Aman Verjee is the founder of Practical Venture Capital, also known as PVC, a practice aimed at capturing unrealized market potential of venture funds in the 5 to 10 year maturity range. Aman is a business executive with decades of experience in high growth and technology companies. He has been a key member of executive management teams that have created billions in shareholder value and thousands of jobs, contributed as a C-suite officer to the creation and growth of some of technology's most profitable and best-loved brands, PayPal, eBay, and Sonos. Throughout Aman's career, he has established a strong track record of creating financial frameworks and leading financial operations for Fortune 500 companies and for rapidly growing startups. He has gained specific expertise in creating protocols that meet regulatory requirements, assisting startups in navigating daunting IPO and SOX compliance plans, and guiding organizations through the entire lifecycle of mergers, acquisitions, and integrations. Aman's career trajectory was launched when a college extracurricular opened him up to a network of people who would go on to found hugely influential and successful companies. Find out how today on The One Away Show. Aman, welcome to The One Away Show.
Thank you for having me. Good to see you.
Yeah, good to see you. Thanks for being here. So Aman, really enjoyed getting to know you in our chats. Thought you would be great to talk to. What is the one away moment that you want to share with us today?
You know, I think if I had to boil down much of what I've done and the career path that I'm on to a single moment or single moments and happenstances, I think my connection to early PayPal really started with meeting a couple of people. I guess one person in particular, Peter Thiel at Stanford University. He was at the law school when I was undergrad. He had started a college newspaper called the Stanford Review. And I was a freshman just starting. And, you know, there's so many things you can do in your adventures at university with your after school time. And my choice to participate in the Stanford Review connected me into that network. And that's where I spent the better part of my 4 years. I was a writer for them. I became editor-in-chief. It turned out that network created a lot of folks who then, among other things, founded PayPal soon after I graduated in 1998. And I was in good connection with Peter and a lot of those early PayPal founders and early PayPal folks. And I had job offers. I graduated from Stanford. I worked on Wall Street. I could have stayed on Wall Street, could have gone into management consulting. Actually did a law degree. I guess I could have become a lawyer. I think if you'd asked me back in the mid 90s, hey, what do you think you want to do? Not knowing what the future holds, I probably would have been like, I want to be an investment banker. I probably want to be in finance. That was my passion and what I studied and what I really loved about studying economics. But just those interactions and meetings with Peter and that network created an opportunity at PayPal. And so I took that job offer. And then I spent 10 years at PayPal and had jobs in finance and eventually ran finance at PayPal. And then 10 years after that, you know, I'm here and I'm in venture capital. And again, some of our co-investors and much of our opportunities comes from that early PayPal network. So it just sort of strikes me that, you know, you meet the right person at the right time. And that is that's a game-changing, career-changing, life-changing moment.
Absolutely. Fortuitous, but also probably because you had some work ethic and vision and, you know, had some thoughts that made things better along the way. So I want to know a little bit about the review. You know, you arrived on campus. How did you hear about it? How did you get involved? What drew you to it? That'd be really helpful context.
I showed up on campus. I guess like everyone shows up on campus, and you get these days when a whole bunch of different clubs come and pitch in what you're doing. And I think what you're mostly looking for is just a group of people to fit in with who have like-minded, either just interested in the same sort of stuff, like to talk about the same sort of stuff. We get along together. There's a shared common passion. I like to write, and so I still do to this day. Even then, I like to write. I had it in my mind that maybe I want to work for the school newspaper. The Stanford Daily was the daily newspaper on campus, and so I think they pitched me at this festival, whatever. You go to White Plaza, you meet all these different clubs, and the Daily seemed fine, but it was very like a little bit boring. They didn't do a lot of hard hitting stuff. They didn't do a lot of stuff that was, I thought, very interesting. It was fine, but didn't inspire a passion. And then later on, I think I picked up a copy of the Stanford Review. Back then, we were distributing actual physical newspapers, like in college dorms and where in cafeteria where people ate. Nowadays, I don't think anyone reads the newspaper anymore. Now it's all digital, and you get newsletters and you get emails, and all the students are on mobile devices and reading on their mobile devices, my kids included. But I actually picked up a newspaper and read it through, and I thought, this is interesting. This is fun. It's interesting. It's informative. The content they do has a bit of a conservative or libertarian bias. Not totally, but that's 2/3 of the paper. The issues they're doing are interesting to me. They were digging in on the curriculum, admissions policies. We're talking about national events. I remember thinking, it's a well-written magazine. It's really interesting to engage with. I got to go see where they are and hang out with them and see if I can maybe start as a writer and learn more, because I enjoyed the content. And it kind of went from there.
Seems like it was just gave you an intellectual outlet, right? To read and learn and question, and also getting involved in that to be able to further those thoughts. Now, Aman, you have a financial kind of background to a degree. It seems like you blended the left brain, you blended the right brain pretty well. You always knew you had a gift on the writing and maybe educating people through writing side, or is that something you discovered through the review once you got involved?
I think it was always there. I think my preferred subjects in high school were math and philosophy. So that's probably about as far different as you can. There are things in common, I guess, in terms of logic and breaking down arguments. But I remember at this high school I went to, the same teacher taught both. He was my favorite teacher. He taught math and he taught philosophy, and it was a really small high school, so a lot of teachers did double duty. Like the gym teacher taught French, for instance. Turned out I didn't become a French phys ed guy. I don't know why. I became a math philosophy guy. But I always liked exploring. I loved to read. At an early age, I was reading all kinds of interesting stuff that my parents were baffled by. I was 12 years old. I would show up at family parties with a copy of the Wall Street Journal. And I'd be reading the journal front to cover, and people didn't know what to make of it. They're like, the kid just wants to be on his own. He wants to read. Obviously, it was, a very early interest and passion of mine. I'm not really sure where that came from, to be honest. It's just something I discovered myself. I did like to write. I think by the time I got to review, you were surrounded by people who were writing professionally, or at least, if not professionally, in the sense of getting paid for it. Like this is their job. This is what they do, and they love doing it. And so that surrounding myself with those people made me better, made me more interested in it, and that's kind of where it maybe blossomed. But I had that interest from a very, very early age.
Totally. Yeah, the math and philosophy interest is, it's so divergent, but, bring them together. I mean, it's the Wall Street Journal, in and of itself. Wow. Super cool.
I'll tell you, Peter Thiel, he majored in, he was one of when I met him, we recognized many similar passions. He actually, I want to say he minored in philosophy at Stanford, and he majored in political science, and then he became a credit derivatives trader. And once I saw people like that at Stanford doing it, like I knew it could be done, and I resisted the notion that I had to track myself into one or the other, especially at that age. I just decided to do both, or to do everything.
Aman, you talked a lot early about the review, getting involved. You said something key. When you get to college, you kind of want to fit in or find your people or tribe. You talked about the review and the material. I'm curious about the network, right? Was you started to get more involved with the paper. I would love to understand kind of how that expanded not just your network, but, understanding of self and also your understanding of, what you wanted to go do. I mean, it sounds like Peter and the paper, it brought together just phenomenal minds. You said that started PayPal. So
Yeah.
did you really know, like, getting in, like, what it was going to provide? So yeah, I know it's a bit loaded, but feel free to take that.
Yeah, I don't think I knew going in that it was it wasn't obvious this is going to be a breeding ground for like future business leaders, finance leaders, venture capitalists. All that sort of happened after the fact. If I look at the people who are involved now, it was instrumental in the founding of that early PayPal network. Some of those PayPal founders who were there have gone on to do other things, like found Palantir, early investors in Facebook. They were instrumental in the founding of YouTube, or were the founders of YouTube. Keith Rabois is now the Founders Fund general partner, and so on and so on and so forth. But I think that early group, what they did seem to have in common was just a desire and a capability to talk about interesting issues, do it in a little bit of a contrarian way. Like there was a certain orthodoxy on campus. I guess it still is today. That it's probably left leaning. It probably is the way the curriculum is taught. The way that diversity and equity and inclusion are presented. Things like speech codes, things like using race in admissions. These are still concepts that are pretty popular on campus. To speak out against them takes a little bit of courage and a little bit of like putting yourself out there and saying, you know what, I think differently and here's why. And to have that kind of debate and have people challenge you and attack you, especially when you're 18 and trying to fit in. Like most 18-year-olds don't want to do that, right? They don't want to poke the bear. They're looking, I think, for acceptance for the first and foremost, and they don't want to be seen as outsiders. I have daughters now who are 12 and 9, and I can see this in them that when they go to a new school, first and foremost, they just want to be accepted. They don't want to be a fly in the ointment. So the review was definitely contrarian. It challenged orthodoxy. It fought for things that we cared about, but it did so in a way that was, in some cases, against the prevailing campus wisdom. And I think that contrarian idea, the kinds of people who will speak up and be articulate and hold their ground, it turns out to make great business leaders and great investors. And so being part of that network, I think, was much more about personality and fit. Mm-hmm. But it turned out to be, people with an MO and just a way of operating that I think has turned out to be very successful. And we've stayed together as a group. We've continued to be good friends. Many of them are still among my best friends today. So it's been a great community.
Absolutely. Well, just to build on that community note, in the article you sent me yesterday, it said that the review still does dinners with, the people on campus that are running it to the people who are alumni. Have you been part of those dinners?
Yeah, I'm the chairman of the board of the review today. So
it did say that, I think, in the article.
So I do the quarterly meetings with the staff. I'll do check-ins throughout the year with the editor or other writers who want a little bit of help. Maybe you can call it mentorship. It's a little bit of just giving back and giving to those students. And then we do quarterly dinners with the staff. We'll do an annual, retreat someplace from time to time. We've done 5-year and just actually recently did a 30-year reunion. So every 5 years we do like a reunion, and we'll pull together old timers on the review, and they'll all attend. So it's a lot of fun.
That's awesome. My question is, what do you notice, right? Think about your time on campus being involved in the review, and then the students of today who are involved in the review. What do you notice maybe just differences in how they're thinking about how they're going about things, right, at this kind of younger age? And then kind of you've morphed in your career, kind of bringing together young and old. It's an incredible melting pot.
Yeah.
I'm curious your experience given the exposure that you see.
Yeah, I think the students are great. I think the differences, there's probably more similarities than differences. I think some of the differences are back in the mid-'90s, late '90s, there were different issues. They were mostly around the curriculum and things like Western civilization requirements. I pushed very hard on a speech code and having the university challenging and overturning a university speech code that essentially restricted what people could say based on certain categories. The admissions was a big topic for me. Only this year, after like a 30-year battle, and finally there was a Supreme Court case which has essentially said to any state-run university and anyone receiving federal money, you can't use race as a factor for admissions. Not race by itself; it can be part of your overall application, but you can't just check the box and admit a certain number of people with different, with certain ethnic backgrounds based on skin color. And 30 years ago, this was a cause that I took up, but for many, many years, I think I think of the 90s, I'd say the general, feeling in the country was probably pro affirmative action. I think 20 to 30 years later, it seems like it's now running like against, like that seems to be one issue, which I think as it's evolved has sort of come our way a little bit. But, the students will go back and forth on like which of the presidential candidates are the right one. I think on the Republican side, there's probably 3 or 4 candidates. If I had to survey the students in the review today, there's no clear majority for anyone. Some are pro-Trump, some are against, some are looking for a change. There's probably differences on social policies. I think back then there was less tolerance of things like homosexual marriage, probably more of I guess what I'd call a religiously based, family values view, maybe on abortion rights. I was a little bit of an outlier. I was more of a libertarian on those issues at the time. And I think the review was very split. And so it's not a monolithic perspective at all. But there was more of a debate back then. I think students today tend to be a little bit more socially open-minded and tolerant of diverse viewpoints. But at the same time, and maybe less partisan than we were 30 years ago. But the issues they care about are a little bit different, which is, I guess, the reality given what this generation cares about.
Yeah, absolutely. I mean, totally. I'm sure eye-opening in a lot of ways, and you have to learn from the next generation and
totally
share your experience.
Really great. Yeah,
totally. Yeah, cool. Well, thanks for sharing your experience with the review and some of the people you met. I'm curious about, Aman, we were on when we walked, last spring, you mentioned something about, I believe you had made some career decisions, and I think you told the story to me about making the decision to go work at PayPal with no business model, if I recall properly. They had no idea they were going to make money, but you saw something that your parents didn't, that a lot of people didn't. I would love for you to take us to that moment in time when it was, do I just do the thing everyone else is doing, or do I, jump off a bridge and figure it out? Because it sounds like you have a lot of options and good options.
Yeah, I think there were a couple of seminal moments in like deciding when to join the company. And I made a couple of different decisions along the way. So I'll walk you through them. The first one was in 1999, I had a chance to join the company. It was probably about a year old. It wasn't called PayPal. It was called Confinity. The pitch I heard, and so this would have been like the spring of 1999. And I just finished a 3-year stint in Wall Street, was at law school, Harvard Law. And the pitch I heard from Peter was like, you should drop out of Harvard Law School. You should join Confinity now. I'm like, why? He's like, well, here's what it is. It's basically a technology you downloaded on your Palm Pilot. We used Palm Pilots back then. Apparently I was all the rage. And using a Palm Pilot, you can beam money from a friend to a friend. And I thought, cool technology, really cool technology, really interesting. I can see how, I wasn't using a Palm Pilot, but I can see how this could be a really impactful technology in terms of moving money around, democratizing access to capital, letting people store and access money through the internet. Like none of this stuff is being done in 1999, by the way. These are all radical concepts. Obviously, it feels like now everyone can email money and send money to a friend, and PayPal and Venmo and Zelle and Apple Pay and everything. Like none of that was true in 1999. Peter basically pitched Apple Pay and Venmo and PayPal and person-to-person payments, but he didn't. He pitched beaming money from a Palm Pilot, from one person to another. So intuitively, I thought this could be really great. Let me think about it. Dropping out of Harvard Law is that's a long putt. Why? Because, when you grow up I grew up in Canada and Kenya, and when you're an immigrant to a new country and your parents don't have great educations and they drill into you from the moment you're born, you will get an education. You will get not only a undergrad degree, but a master's degree. Like that is your ticket to a better life. And they move countries in order to, let you have a better life. Like a big party is like, I got to see through this whole education thing, right? Like you're pre-wired to say, I want to finish what I started. And then, I'll graduate and then I'll have options. So I talked to my mom that night and I said, hey, I'm thinking about joining PayPal. It wasn't PayPal, it was Confinity. And she was like, dropping out of Harvard Law School? That sounds crazy. Like you already lost me at dropping out of school, but tell me about the company. And so I told her, here's what the CEO said. You're sitting down at a restaurant. You want to split a bill for a pizza or something. Rather than paying your, colleague $5.19 in cash, why not beam money from a Palm Pilot? She was like, I don't use a Palm Pilot. no one that I know uses a Palm Pilot. Her background was like she's a daycare teacher and wasn't like a business executive, so she wasn't using BlackBerrys and Palm Pilots when everyone else was. She was like, cash will work just fine. $5.19. What's the problem with cash? That's a $5 bill. That's like, it's basically a dime, a nickel, and a few pennies. Why is that so difficult? Oh, Mom, cash is, it's dirty, it's passé, it's expensive, it's legacy, it's not digital. She was like, I don't see the problem. I don't understand what the hell you're telling me about. Like, I, as a potential customer, have no reason to, not use cash. So I tried one more time. I said, why don't you just do me a favor, Mom, open up a PayPal account. Okay. And let's just try it and see what you think. She's like, all right, what do I do? I'm like, you go online to paypal.com. You create an account. She's like, fine. How do I do that? Okay. Let me walk you through that. How do I send money now? Well, Mom, you have to give them your credit card number and you have to give them your bank account number. And her reaction was, what the hell are you talking about? You want me to put my credit card number online with a company I've never heard of? And my bank account number? What am I, an idiot? No one in the right mind is going to put a bank account number online at Confinity, paypal.com, this fly-by-night startup that I've never heard of. That's just, forget it. She wouldn't do it. So I realized, wow, we're not solving a problem at all. The technology could be cool. Peter is a compelling figure, but you're not solving a problem. So I did not join PayPal until 2 years later. And the business model at PayPal was unclear. And like, they didn't know how to make money. They were kind of thinking, we'll take money in from moms and pops and we'll make money on the float. And I was like, I don't think that's going to work, Peter, because I can see interest rates going to zero during, the 2001 bubble. Interest rates collapsed. And so all of a sudden float disappeared. So anyway, there are all these issues with the company. But fundamentally, it was like, I don't think we're solving the problem. Well, 2001, I graduated. 2002, I joined PayPal. By then, they were like making money. They had revenue. They were growing. They had pivoted away from the whole Palm Pilot beaming money to each other idea onto let's process payments for eBay sellers. Let's let eBay sellers, rather than taking money through cash and checks and money orders, let's let them process credit card payments. As soon as they did that, like the business took off, and then eventually we were acquired by eBay. And I think once we realized here's the problem to solve, we kind of skated to that puck, and that was the business. And that's actually when I joined. So the lesson for me was every time I talk to founders today, I always start and end with, what problem are you solving? Don't tell me about the technology, the team. Don't tell me how cool your cryptography is or your quantum computing backbone. Tell me again and again and again, who's your customer and what problem are you solving? Yeah.
It's interesting. So two things. One, I remember the first part of Jimmy Sony's book, and it describes the beam. The founders. It describes the beam payments. I think in the first 50 pages, maybe or 100. But yeah, you see, you shared that well. And also, I think what's interesting is you realized, hey, when you explain this to your mom, and she really struggled with how am I going to do this, maybe at a direct consumer level. This wasn't going to work in a scalable way. I'm curious about, or interesting, is that it sounds like Peter kept recruiting you. You said no to them the first time. He came back. What do you think Peter saw in you specifically? I mean, I'm sure there was a lot of talent on the market. Why? What was it about you that he kept coming back to you on?
What did he see in me? I don't know. You have to ask him, I guess. I can surmise that in 2001, 2002, it was first of all, there's a lot of talent in the market, but I think getting someone to leave a good job at a company like McKinsey or Goldman Sachs, like 20 years ago, that was hard to get someone to leave a job like that and go to a startup. Today it's easier. I think culturally, startups and early stage companies are a little bit more attractive, culturally speaking. It's kind of a thing. If I ask students on Stanford today, rate for me, you got three choices: go to a startup, go to Goldman Sachs, go to McKinsey, or whatever the management consulting and banking alternatives are. I think it's probably. I think you get a plurality saying I'll go to a startup of those three. It's cool. It's interesting. I can make a lot of money, but it's an accepted thing to do. If it doesn't work out, I can always go to consulting or banking later. 20 years ago, that wasn't the case. The number one and two jobs at Stanford were, number one was McKinsey, number two was Goldman Sachs. So that's what everybody wanted to do. And I think Peter was like, well, if I want to get someone to leave a good job, the easiest way to get someone to leave a good job is like having a relationship with that company's founder. And like he knew people in that network already that they respected him. He could work with them. We had cultural, a shared concept of how to work and some shared values. So I think for him, that was just a natural recruiting ground and how to build that, that early PayPal team. And I happened to be part of that network.
Just was fishing for some attributes there, but I'm sure it all worked out. Aman, what you said, you locked in, you graduated, and then you came back, and that was right at the time that they locked into eBay and really, took off.
Yeah.
Curious if you can just share the story for, the audience's sake. How did they find the problem with eBay? It sounds like it was awesome timing. And then what was your role specifically once you joined?
I had a couple of different roles. So in 98, 99, when I was at law school, I turned down the job that Peter offered me. What I did say was, hey, if you need help as like a consultant or a part-time thing, let me know. I'm happy to do that. He said, sure, you can help. We're drafting an S1 to go public. Can you come for the winter break of 99 and just spend 2 weeks in the office and help draft the S1? So that was my first interaction with the company. And then I joined full-time in 2001, and that was more of a customer analytics, running a customer analytics team, which eventually became the strategy team. And then subsequently, I ran finance for PayPal. So it was always in the finance, analytics, legal side. I think as I was writing the S1, we were essentially trying to figure out in these documents, you have to share a lot about your business strategy and your customers and customer concentrations and stuff like this. And as part of that exercise, I think they just discovered, as they were studying their transaction data, there are a lot of people who are sellers on eBay using our product. Not exactly what we intended, because we intended this to be more person to person, but we're analytics-driven folks. We're data-driven folks, and we just observe that when people fill out these transactions, they're putting in notes, and those notes are making reference to eBay transaction IDs. Somebody on the team, I don't really know who it was probably someone in the marketing analytics side before me, just started doing some research and trying to figure out why are people referencing all these eBay transactions? That's interesting. It turns out that 40% of our business, at least, without us even intending, 40% of our business is coming from eBay sellers selling to eBay buyers. And if I go to the listing, I can see what they're doing. They're saying, hey, you want to buy this Beanie Baby plush collectible item? Let's close the transaction, which you can do in the eBay platform. eBay was not facilitating payments at the time. So how would the world work in 1999? You would buy the item on eBay. I actually remember buying baseball cards on eBay and ticket stubs, which was my passion. And the seller would say, send a check or a money order to this address. So you send the check in. It's a week for the check to get there. Once I get the check, I'll send you an email and I'll let you know that the check arrived, and then I'll mail the ticket stub. So a week for the money to get there, a week for the ticket stub to arrive. I got the item in 2 weeks. And a lot of that is just the friction, right, in the marketplace. Well, what sellers were doing was they were saying, send a check or send a money order, or you can Western Union me here, or I accept PayPal. And, here's my PayPal ID and email and all this other stuff. So eventually the PayPal team, really under David Sachs, was let's make that eBay transaction really easy. Rather than forcing someone to list the PayPal ID in a eBay auction form, let's just create some, use HTML to create a checkout button. So all you have to do is click on a checkout button. That'll take you to PayPal. You'll pay the seller, and then we'll return you back to eBay. So we'll take you in a bit of a circuitous payment route, but just electronify the payment. So rather than the money taking a week to get there, it'll be there in 2 minutes, and PayPal will facilitate that. So we actually solved a big problem. I think eBay loved us for it because we were making their transaction marketplace more efficient. And then once we integrated on eBay and started using these HTML buttons, our market share went from 30 to 40 to 50 to 60%. And then eBay bought us, and we continued to integrate and make it even more seamless.
What a cool journey. You got to see kind of the hockey stick up and to the right.
Oh, yeah.
Once eBay acquired you, Aman, how long did you stay on? How long did your role evolve? I'm just curious.
Yeah, I loved it. I'd say most of that early PayPal team left within 3 to 6 months. There was once they acquired us, they began integrating us right away, but we maintained a independent brand and company. But a lot of eBay folks came over. The new CEO came from eBay. He and I got along great. He was a former McKinsey guy. He had years of corporate experience. It was a very sharp contrast culturally to that early PayPal group, which was much younger, much more product oriented, and just operated at a different speed, I think, than what eBay did. So a lot of the PayPalians wasn't a great fit culturally, and they they vested and they made their money and they moved on. I joined a little bit late to the game because of my detour at Harvard Law School, I guess, and my mom. But, I had shares, and it's 4-year vesting period, right? So I accelerated a bunch of my shares upon the IPO and the acquisition. I had at least a couple of years of vesting to do. So I stayed from 2002 on, and I kind of made my mind up. I'm going to stay here as long as my career is going well and I'm getting along with the people. Maybe it was my, Wall Street law school background, but I seemed to get along just fine with the new eBay crowd. Different, but I got along great with them, and I was learning a ton, and I was getting a lot of responsibility. By the time I was in my mid-20s, I was running the strategy team for PayPal. By the time I was 30 years old, I was running finance and FP&A for PayPal. So I was just having a blast, and I stayed all the way up until 2010. So I had about a 9-year run at PayPal and eBay, and really enjoyed every stage of it.
Looking back, you said something about the early PayPal founders. They were more product oriented. They were faster. Then the cultures collided. When you look at a Peter or a David that you mentioned, what is it about them, right, that you saw, like, with their ability to kind of see product, execute on that vision, with the speed, build the team around it? What makes them such, strong product leaders?
I think Peter and David and some of those guys they're a little different. I think what they have in common is they're extraordinarily bright. They're fast talking, fast moving. To the extent that you fail, it's okay to fail, but fail fast, move on. The biggest difference, I think, between them and eBay and maybe some other companies was just a willingness to say what you think and be ideas oriented, but not make it personal. So more than once, I would disagree with, David and Peter less so, but there were different opinions on the management team about how to run product, what to do. But we'd always have to debate. It'd always be ideas, and then we'd always leave as friends. And so we'd be on the same page coming out of that room. No politics, no tolerance for backbiting or any of those kind of Game of Thrones political alliances without involving people. It was always about just tell me what you think and why. And Peter would take ideas from anybody. I mean, I was junior guy on the IPO deal team. I was not, a high-ranking officer in the company when I joined. But he gave me every quarter to say what I thought and say what I wanted to do. I think Elon Musk, who was there at the time too, he's the same way. Elon's a very ideas guy, but it's like, once you have a discussion or conversation, if you don't have your stuff buttoned up, you don't have your stats, you don't have your data, you don't have your opinion properly articulated, like, you're not going to last long. eBay, subsequently, I think later PayPal, you get a bigger organization, so it's not quite like that, right? It becomes a bit more political. It becomes a bit more like, hey, before sharing the ideas to the CEO, make sure you talk to this person or that person, kind of get sign off from legal. Once you get a perspective from marketing, let's not step on those toes. I mean, when I joined, I remember PayPal being a very flat org. When eBay took us over, we spent so much time org planning and HR and like who reports to who and, all kinds of this other management consulting-y HR. I mean, I had an HR business partner and all this sort of stuff. I was like, wow, it's just a different feel. It's just a different game. And I think Peter and David have a very low tolerance for that sort of politicking. David is a super intuitive product guy. Like, he'll see product flows and work through them. He just has an intuitive knack for knowing what will work and what won't work, being very quick to make decisions based on his intuition and using data to validate. Peter's a little bit different. He's a little bit more cerebral and data-driven about it, I think. Elon's another very intuitive but very astute, product guy. He just has a natural affinity for what works from a customer's perspective, which I think was really great. I think too often businesses have a hard time, like just my mother conversation, the fact that I could talk to my mom and get her perspective, like, here's why it won't work, was great, because my instincts were the opposite. My instincts were this could be huge, like beaming money through the internet or through, wireless communication to replace cash. I love it. But the more I talk to people, I was like, wow, no one else in the country is ready for this yet. And so you really have to know your customer and fundamentally be in your customer's shoes, right? And if you don't intuitively get there, then you have to do it by surveys and data and really pay attention to that problem solving. And I think Peter, David, and the team were really, really good at really understanding and solving for what their customer wanted. Yeah, it seems like an incredible culture that just breeded, good friction or healthy friction, right? To drive the right outcome. And I couldn't agree more with understanding the customer and kind of building around that and challenging the team. So, Aman, the first time I met you, you gave a presentation at that 42 Geeks event on real estate and all the things. And I thought,
wow, I've told you this, but it was so digestible. You know, it was a topic that, I mean, was interesting, but one of those topics that you made a lot more interesting.
Mm.
And how do you go about, you know, this? How have you built and developed at a just personal and professional level the ability to articulate thoughts, present, right, and educate? When you look back on some of your professional experiences, I know we haven't talked about two of them yet, but I'm just, you know, want to understand kind of what's that taken to be able to do so well.
First of all, thank you for saying that. Making commercial real estate interesting is hard to do for a broad audience, right? I think a lot of it came down to, I had some great teachers in high school and some, you know, not so good teachers, and I saw some great professors at Harvard. I actually taught economics at Harvard, and so I had a chance to learn, you know, how to teach and how to lecture in front of some very good professors. And so I took some tips and tricks from, you know, from those folks. And when I was a lecturer at Harvard, I was at law school, so I was sort of, you know, a guest. I was like a assistant teacher in the economics program. And my behavior, my practice was, let's put together the content. Let me start talking about the content that really matters to these students, but let me stop after about 5 minutes, and let me hear from them what they're saying. So just make it interactive. And I just made it, force myself, even though that wasn't necessarily how the curriculum was built, force myself to make this as interactive as possible so I can get the best interaction from them. And if I can do that, you know, and then I know they're engaged, then I think I'm doing a good job. And as I began to, you know, force myself to do that, then the feedback was great. Like, people said, oh, you know, we love the class, content and all that stuff is interesting, but we just love the fact that it's interactive and that, you know, you get to do things to encourage participation of the classroom. Most teachers, I think, don't practice it. You know, it's hard to do. So you have to plan ahead. How am I going to make this topic interactive, and what am I going to do in order to get this, you know, this group of students to talk about this topic in a way that's digestible? And it's not going to be perfect. So the fact that I did it for a couple of years at Harvard, I think, really helped me to refine my style. And I still have like distinct recollections of, I think when I was at Harvard, we had a chance to go over to MIT, where we had a lecture from John Nash, who was maybe the smartest, most, you know, one of the most insightful writers about economics, and I think he's won a Nobel Prize for his discussion of like game theory and equilibriums and the Nash equilibrium. Anyway, he was featured in the movie Beautiful Mind, and so I was really looking forward to this, you know, lecture by John Nash, thinking this could be one of the moments I will, you know, look back on in my history and just, you know, memorable. And I remember my recollection of now is like he basically came and he began lecturing about some interesting topic, but all he did was like he wrote stuff on the board and he read it, and there was no interaction at all. And then he was like, I'm going to write the stuff in a transparency. We had transparencies back then, or at least he was. And he would write the stuff in a transparency, and he would put it on this projector, and it would project on the board, and he would like literally read it. And it's so small print and illegible. The first minute, I was like, wow, this guy's funny. This looks like a joke. Like, he's going to read the transparency. Ha ha. What a laugh. He wasn't joking. He went on for like 60 minutes reading these transparencies. I'm like, wow, that's like the least engaging. It's a fun content, and he's an exciting thinker. It's just not a fun, you know, engaging format. So you take examples like that, and other professors do it too, and you realize there's just a better way to do this that's going to be better for students. And I think I just, you know, I've spent many of my years now practicing and honing that capability of just making it interactive for folks. Yeah, totally. One of the things that you mentioned was at HBS or Harvard Law, you learned a lot. And, you know, two of the sharpest thinkers, I was with one last night, and they were speaking about this and telling me about, learned a lot of their presenting abilities actually at HBS. It seems like there's this ingredient within Harvard or, you know, law or the business school that really teaches people how to really critically think and present, because there's three distinct people have all kind of come out of the same blood. It's an interesting pattern I'm starting to recognize. So, interesting, Aman. Thanks for sharing that. Now, Aman, your career after PayPal, I mean, you started to get into, you know, you've become, you know, did work at 500 startups on the investing front. Now with secondary, with primary VC, which I also think is a very fascinating model.
how did you get into investing? Was that a path you had always wanted to kind of go down as you're getting kind of finance bug? But it'd be great to dive into the investing career of yours over the last decade.
Yeah, I think up until 2010, I left PayPal. My next 3 jobs were chief financial officer roles at private and public tech companies. The biggest one you may have heard of is Sonos, the consumer electronics company. They're now listed on the NASDAQ. And so when you get into and they were venture backed, and then my next 2 roles were VC backed companies. So I was dealing with investors all the time. And a CFO, you're always like pitching to investors to try to make your company understandable to an investor. So you get to know what they think about, what they like and don't like, and from their questions and diligence, you get to refine your ability to just discern what's a good investment or not. Why am I investable, and what are they going to be looking for? And so up until 2017, that was just that venture-backed experience was really helpful. And then I went from being an operator to an investor, and it was a friend of mine, a guy named Dave McClure, who pulled me into the 500 startups universe. And he's a prolific investor, has been doing it probably since 2005 or 6. He was also early PayPal, but then he joined Founders Fund, Peter Thiel at Founders Fund. He began making investments on his own, and then founded his own company. And he's probably up to over 2,000 individual investments or through his firm, like over the last 15 years. So he's a prolific investor. And so I learned a lot from him. And our strategy has evolved over time. But basically, as I joined the firm, it's a little bit of like that operating experience to recognize good operators and what they're paying attention to and what they're maybe not. A little bit of like David's perspective on things like portfolio allocation, how many bets to make and why. Do we follow on? Do we not follow on? So I, gathered all that information into my tiny little brain. And I think I realized, phase 1 of my career was being an operator, and I loved doing it. But you get to that 3rd chief financial officer job. And I think for me, I realized I don't want to be doing this the next 3 jobs. I feel like 3 is enough. Learned a ton, the discipline's exciting, but I feel like my learning runway as a CFO is kind of running out of steam. I'm spending a lot of my time every day doing stuff I'm not, no longer as excited to do. It was exciting 10 years ago, but I can't do stuff for more than 10 years and feel excited by it. Maybe I get a little bit bored. And then as an investor, it's a different skill set. So you begin to hone, your thinking on how do I invest in companies and what role you want to play. And so I'm like 6 or 7 years into that phase of my career, and we'll see where it goes. But so far, so good.
Sounds like Dave McClure, obviously had some experience. You joined on with him.
Yeah.
Obviously learning from past leaders. With 500 startups, that was, a big deal. I mean, still has a lot of recognition.
Yeah.
In now primary, right? You're doing more on the secondary side. Right. Can you talk a lot about, with primary, you're not doing original kind of seed or startup, investing, you're buying more. Can you explain that model just for the audience?
Yeah. So primary investing just means you're buying shares directly from the company. And in venture, that can mean early would be like seed or Series A. And most of that, I think, is like understanding the founder and whether the founder really has based on the idea that they have. I would boil it down to, is this a founder I want to invest in? Do I think he or she can manage and run and scale a business? And then do they have a problem that they're solving that they have empathy for? So if I had to sit this person down in front of my mom and have them explain why she should use this Palm Pilot to beam money, like, would they be successful or not? Can they sell? Can they, develop a product and sell it? Later stage is, Series C, Series D, call it growth stage, and then, or late stage. And that's maybe is more about the financials of the company and the progress they've made, and if they can get to an exit, and things like growth rates and unit profitability and, the margins of the business and how they think about that becomes maybe more paramount. Maybe the team as opposed to the founder. So you invest in different things along the way as a primary investor. What we do is we do secondary investing. So we don't invest directly in the company and buy their shares directly. We go to early investors in those companies, people who've already been shareholders for a while, but who need liquidity. So imagine a company like Airbnb took like 15 years to get public. Great company, made everyone a lot of money along the way, but there were a lot of early investors who were like, I can't be 15 years locked up in an illiquid company. Company's doing great, and I love that, but I can't wait 15 years to get my money back. Year 5, year 6, year 7, investors invariably start thinking, can I get some money off the table now? Some or all my money off the table. I'll take maybe a smaller win now instead of waiting for a bigger win later. Early employees, work at Airbnb or work at a company, they get options, they get shares as a compensation. And they don't want to wait 15 years before they can buy a car or buy a house or take a trip with a wife to Europe. And they're probably not getting paid a high salary with big bonuses the way that you might be at a big public company like Google or something. So a lot of these early employees are looking for liquidity. So what Dave and I do is we go and we basically buy shares and interests from these early shareholders, early investors, cash them out. Usually we can get a great deal, a real significant discount to the fair market value of the company, and we just ride along until the company's liquid. So that's our secondary strategy.
Such a neat kind of way to go in when I think so many people are focused on, primary investing, as you said, but, really creating an opportunity to, create access to capital for those that, want it. Some of the conversations we've had about just with the market, with just current primary investing right now, there's a lot of data out there. There's not as many deals being done. I mean, there might be signs that that's coming back a little bit. The market's not moving as quickly. It seems like it's a really good time, right, for what you're doing at primary to really take advantage of the market. How are you thinking about the strategy at large? And how are you finding, right? Obviously, there's network effects, but, how are you finding the opportunities? And then once you do, like, what is that process, right, to bring, a deal to life?
I think the market right now is, I think it's very good for secondary. I think it's going to be tough for primary. I think what we saw.
No, I'm sorry. I'm getting it confused. Yes, secondary. Go ahead.
Yeah, for secondary. I think the benefits of the secondary strategy really is that when the IPO window dries up, like it is now, companies aren't getting public. They're not getting liquid. They're not getting acquired. So there's very little money going back to the early shareholders. And some shareholders are fine with that. And they're like, long term, hey, I'll hang on to, my Airbnb stock or SpaceX for 15 years. And if it's 17 or 20, like, that's fine. I have an infinite time horizon. But a lot of early investors are like, I can't deal with a 15 to 20 year return. Like, I've got tax bills to pay, kids to put in school, stuff that I need to do the next 5 years. And so and if there's no IPO coming, I got to find some way to get my money out. And so I think that's the opportunity for secondary funds right now, is to be that liquidity market maker. If the IPO market were to come back fully, which I don't expect it to, like, I think it'll be a little while we're in this trough. It won't come back all the way. It'll come back a little bit. I think we'll see some wins, maybe even in 2023. I think you referenced it. Deal activity is way down, but it's slowly coming back. It ain't going to come back to full speed, I think, for a while. It takes, in my experience, a year or more for it to kind of revert. It's a slow step back.
Yeah.
Valuations will remain depressed. IPO opportunities will just be a handful of really, really good companies will make it, but most of the others are going to have to wait a little bit. So I think there's a lot of great companies that you can buy at a significant discount to the true value, and that'll go on as long as the IPO window is either closed, or just if it's partially open, that still presents an opportunity for secondary firms.
Yeah, so it sounds like there's a total inverse correlation between the IPO market and secondary. So, like, let's just say you lock in, you find some investors or you find some early employees at a company before IPOs.
Yeah,
it's going to take time. Is it, let's go get, strategically, let's go get one or two of those people or investors, and then kind of wrap your arms around the rest of them? I mean, how do you really kind of land and expand?
I think it's better for us to go to be selective. So if there's a great company, most of the investors are going to be fine waiting and holding. Like, out of 100 investors, probably 90 will prefer to buy. Will just prefer to hold because their liquidity and their timeline supports what the company wants to do. But there'll be 5 or 10 that are kind of squirrely. It's like life events, family offices needing to shift money around, maybe corporate LPs, like we saw when Elon Musk bought Twitter. He completely changed the strategy of the company overnight. And a lot of the investments that they would have made in early VCs were just no longer strategic, right? Change of control, new manager, new CFO, new CEO. Hey, what was strategic 7 years ago is no longer strategic. But it's not everyone in the cap table wants out. We wouldn't do a deal like that. Not in our current form. We'll wait for the onesies, twosies who really need money to come to us, and we'll find them through our network and through friendly GPs and CEOs. And we'll just be very selective and taking out these onesies and twosies. I think the arbitrage is better. The pricing is better. We don't want to be in a competitive deal where we're trying to tender offer out a whole company and competing against other funds. We want to be selective and under the radar and just dealing with people on the QT.
Awesome. Yeah. Well, that's a cool strategy. And one of the things that you said that You say you just want to build a good, when I was with you, you say, I just want to build a good venture firm. What does that look like to you, for you and Dave, 5 years out, 10 years out, where do you see what you're doing today? What's that look like? It doesn't sound like you're trying to take on the world, but you want to do a really good job for the people that you're serving. What does that mean, or how make that tangible?
Yeah, I think it's a bunch of steps along the way. So we're through fund one, we're deploying fund two right now. I think for our investors, one win would be, can we generate consistently like above market returns? Can we generate 20% north of 20% net IRRs during this cycle? Fund one seems to be heading in the right direction. We're deploying out of fund two, but we don't know for sure. But I think it's going to be a good time to deploy. So you want to be able to provide those kinds of reliable returns to investors. I think on the seller side, I think the most important thing when you're dealing with a seller, especially in this market, is you just want to be transparent and fair. So if somebody comes to you and says, hey, I want to sell these shares at a certain price, being able to tell them where you're pricing it and why, and just being transparent in that assessment is a nice win. I think a lot of these secondary firms that we're running into, or just venture in general, it's an opaque, not very transparent marketplace. The reporting is a bit cloudy. The valuations are messy. People don't always trust evaluations, but aren't very transparent in what they share and why. I think it'd be a great thing if to scale, if we were like fair and transparent to the seller while generating above average return to the buyer. That's kind of what we want to be. And then we'll be able to, if we can do that, then I think fund three will do great, and fund four will do great. And then we'll keep building and scaling the team. And eventually, we want to be a market leader in creating the secondary opportunities. I think the venture class right now is really broken. When you don't have transparent reporting from everybody, and it's 15 to 20 years to get your money back, I don't see the asset class ever really scaling to become as big as private equity or some of the other asset classes out there. And that's going to mean there's less funding than there should be for private tech companies, right? Founders can't get the money that they need because the investors don't want to invest. And that's also not great. So if we can help to solve that secondary problem, it's good for the venture category.
Right. And this may be a naive thought, but it could be right, but maybe you'll have context to this. It seems like without the primary market in the first place, or the primary venture market, the secondary market would have never formed. Is that fair?
Yeah, I think so. I think you need the primary direct investment into companies that kind of fuels the business.
Interesting.
Yeah.
Gotcha. Now, Aman, we have a couple of minutes left here. I want to just do a quick couple rapid fire questions, and we'll send you on your way. Okay. Financial books or books in general that have really informed you or left a mark in your career.
Top of mind right now is Edward Chancellor's got a book called The Price of Time, which is really good. I'm a little bit biased because I've been researching my own book, and I'm writing a book about financial bubbles. And so I've read about all these different financial bubbles, from Amsterdam to the Mississippi bubble in the 1720s to the 1929 Great Depression. There's a book about John Kenneth Galbraith, not my favorite economist, but a wonderful recap of 1929, which was great. There's the decline and fall, I guess, of long-term capital management in 2008. There's some great books about there. The Lehman Brothers bankruptcy in 2008. There's a couple of good books about that. I think those are all fascinating episodic discussions of historical anomalies, and those are all top of my list.
And if you could go away for a week, have a think week, read all the books, write all the things, have your favorite people there, where would you go, and who would you bring?
So the Lehman Brothers book I was thinking of was The Colossal Failure of Common Sense. I think that's a great one. I think if you could just bring the annual shareholder letters of Warren Buffett with you, that would be another. That's just a fascinating read. He's an interesting intellectual thinker, and the way he approaches investments, I think, is really good and fun to read. If I could just bring the books of Michael Lewis, he's probably my favorite author. He's got a wonderful, The Big Short was one of his books from 2008, which is a fun read. But he also wrote, I think my favorite book of his of all time is Moneyball, which was a great exposition about like the revolution in baseball management. Another sideline of mine, which I love to do. I'm also a Little League coach. But I think that was just a fabulous book. And he's also written Liar's Poker, was his first book about his experience with Salomon Brothers in the 80s. So that's probably on my Kindle. That's my Kindle list for the go away for a week.
Gotcha. Amazing. Well, Aman, this has been a treat. Thank you for sharing your experiences, your career, and all the things you've learned. Where can people find you, reach out to you for secondary deals, and get in touch?
The easiest thing is to go to our website. I am at Aman at practicalvc.com. Or you can go to practicalvc.com, the website, and you can contact us there. And we blog and put stuff up there, and all of our contact information is up there too.
Awesome. Well, thanks for making time.
Thank you.
Thank you for joining me on the One Away Show. If you enjoyed this episode as much as I did, please leave a review and follow us on Apple Podcasts or Spotify. Have a one away moment you'd like to share? Follow me on Twitter or Instagram at BrianWish_, or reach out to me on LinkedIn and tell me about the moment that altered your life. The One Away Show is produced by Arcbound, a company dedicated to helping entrepreneurs, experts, and visionaries launch authentic personal brands. From message development to podcast production, social media content generation, and book writing, we work with you to create your arc. Head to arcbound.com to learn more. Thank you for listening, and please join me next time on The One Away Show.